Hey, what's going on, everyone? This is Sawcruhteez Streamz. It is Friday afternoon, and I am your host, Sawcruhteez. I am going to be very excited to dive into some charts today. I think that there won't be any shortage of things to talk about, which has basically been the case over the last couple weeks, and got to be grateful for that because sometimes it's the case where there is just very little to talk about when the market is just stuck in some sort of very boring action. There will sometimes be there was not anything to really talk about at all. Well, that just hasn't been the case recently, which I'm very grateful for, having started a new YouTube channel. So today will not be any different from what I can tell. Definitely within a breath of getting a golden cross on the 4-hour chart. So that will be the main topic of discussion. Before getting into some charts today, there are a couple things that I had gotten some comments on and just wanted to share with everybody. So we'll go ahead and pull up what you guys look at when you are following along and seeing in the background. I have a couple things back there that I wanted to share with you guys because this is stuff that is as important to me as anything else. So first of all, we've got my little stand here with two little bottles that I keep very close at all times. And this one, we notice that's my soul support, and it is empty. And that's a big problem. I mentioned on a recent episode that I have a spiritual mentor, and she's been out of town for a few months traveling the world, and I have since run out of the soul support that she provided me, and that's a big problem because my soul is often in need of support. And the other thing that I have here is some hemp oil, which is legal everywhere, non-psychoactive. It is basically very helpful for for anxiety, which I have no shortage of, and also very helpful for sleep, which is something that is also very important, and a lot of people find a lot of benefit from regular use of hemp oil. So definitely give that a look if that's something that you guys have heard about, maybe interested in. I couldn't recommend that more highly enough. And last, we've got some healing stones, which are good for our energy. We've got specific ones that are used at different times, and every morning I will load up in my little pouch here with some different stones that I may be needing their energy from. And today there was one specifically that was jumping out at me, and that is the Uncanite, Unakite, and that promotes self-awareness and self-love, both things that are absolutely vital when trading, and specifically when things maybe aren't going exactly how you wanted. You can really become very critical of yourself, and or you can kind of become delusional. And having some self-awareness combined with self-love is basically maybe the most important aspect of trading as far as I'm concerned, because self-love is not arrogance. It is allowing yourself to screw up and maybe make mistakes, and also allowing yourself to be aware that you're not perfect and that you are going to have some areas that maybe leave you like you could have done better or could have done something different, and accepting who you are first, and then being aware of areas that you can improve are two things that are very important to me, and what really helps me when I am kind of struggling with the emotional turmoil that can come along with actively speculating in markets, specifically Bitcoin and cryptocurrency. So that is a good segue into the chart that I am ready to go ahead and pull up now. And that is what we are looking at on the Bitcoin 4-hour chart. Yesterday we were drawing a bunch of lines here, still left. Somebody did send me some information about how to delete lines and save those, the ones that you want. So thank you very much for that. Much appreciated. That's been driving me absolutely crazy. So yesterday, I drew this line. This was basically the last area of resistance, the last stand for the bears as far as I was concerned. I was really seeing this as a pretty clear-cut trap that trapped in bulls and wiped out shorts, wiped out the stop losses on shorts, and was thinking that if we could get back above that wick, then really the only thing that mattered to me is if we got back above there, I thought that there was a very, very, very high probability of these crossing over. I think I may have said something along the lines of 95% or so, and that's definitely what I was thinking. And then drew a couple other lines right in here off of this doji to help me identify a very important area that if we broke up from here, that was a bad sign for the bears, and if we broke down, then I was really going to feel good about these not crossing over. So that is where I set my stop loss. Basically was above here because I believed that if price broke above there, then I would have the signal to exit that I absolutely needed to execute ASAP. And I will often set stop losses, hard stop losses in this situation where we're consolidating on top and moving average is coming in sharply, and it looks like if even we get, just spend some time where we are, they'll cross, and specifically if we run up, they will, be a very, very high probability to cross over. And this, what we're seeing right now, is such a good example of why I am so hesitant to use hard stop losses, because things can change so quickly, and that's why I love using these moving averages as my stop loss, because if those cross, I'm very confident that I don't want to be in the position, whereas up until the moment that they cross, there is a significant chance that we get something like this. So last night, I was watching this action right in here. This opened around midnight my time. I'm watching it, and it's really, I really wanted to stay up and be able to wait for confirmation of this crossover coming instead of using a hard stop, because I was still just real worried about a wick up and then a sharp reaction down. And if I have any ability to manage the stop loss manually, I just strongly prefer that. If we get a close and the moving averages cross, then boom, I want to get out. But if those crosses don't happen, I want to do everything in my ability to hold on. And I had to go to bed is pretty much what happened. It got well past my bedtime. I'm watching the charts, and I'm getting bleary-eyed, and that's one of the main challenges with Bitcoin and markets that are open 24/7, specifically with this strategy, is you can't always be there available when it looks like these are ready to cross. When these get this close, this is the priority in my life. I'm absolutely making sure that I have one eye on these charts, but when I got to go to bed, I just know that in 8 hours something could happen where when I went to bed, I figured we were either going to wake up with the price above 11,200, or I was going to really be upset about how it proceeded. And that is basically what did end up happening. Is my stop losses must have gotten triggered almost certainly on this candle, and I got taken out of my short on BTC. It would have been right here while I was sleeping. That would have been about 4 in the morning my time. So there was just, outside of pulling an all-nighter, there was nothing I could do. I had to set the stop loss. And if I was to look back, that's what I always do, is not do my best not to be results oriented, to look at the process, to look at if I did this same thing 100 times, would that be the best way to handle this situation? And absolutely, if I would have gone to bed last night without a stop loss because I really felt like something like this was going to happen, that would have been a mistake, because I just did not have nearly enough reason to believe that. These were getting so close, and if I didn't enter a stop loss before going to bed last night, that would have been a mistake regardless of what happened, because anything could have happened. We could have shot up through 11,200, maybe up to 11,500, or we could have went sideways, or we could have had this sharp move down. Any of that could have happened, and if we run that 100 times, the absolutely how I want to handle this situation is setting a stop loss and just understanding that out of those 100 times, this is going to happen, but that's going to be, it's much more important that I'm protecting my risk and sticking to my game plan than, being hopeful, basically being overly hopeful. And my game plan was to wait for these to cross, but that's something that 100 times out of 100, I want to be setting a stop loss right here because of how likely these are to cross. When you're looking at some action like this and these are getting this close, I absolutely need to be entering a stop. And when I end up exiting right here at basically the tippy top, that's where I need to, have some self-awareness and ask myself, and did I stick to my plan? Was I executing to the best of my ability, provided the restrictions that I had based on the time that things were happening and that along the line? And I also have to, have some self-love and realize that absolutely, I believe that I executed very well. I did a great job of holding all the way through. When it's really looking bad, I'm being comfortable, sticking to the strategy, looking at the things that are most important to me. And then when it got to a point where I had no reason left to really believe that I should hold on to a position through here, no reason to believe that that would be able to break through here and still resist a moving average cross, I absolutely have to forgive myself for potentially, doing something that in hindsight doesn't look excellent, but in reality, if I run this thing 100 times out of 100, I think 90 times this is going to cross and price will move up, and I will look back and be very happy that I exited around here. And maybe 10 times out of 100, something like this happens where maybe I could have held on to my position or got out at a slightly better price. So be it. That is a situation where I then just have to look and see how risk was managed, because we know that we're going to lose, and we know that sometimes we're not going to love how that it plays out. But as long as we are managing risk properly and sticking to our guns and not, we're not doing things out of emotion. If I didn't enter a stop loss last night, that would have been out of emotion. It would have been because I know that I am being overly hopeful when I don't have good logical reasons to feel that way. So I can be very comfortable with how things played out, even though it may look kind of bad right now in hindsight. For me, not being results oriented, I'm knowing that if I ran that 100 times, that absolutely I need that stop loss there in that situation. And I have experience trading this method, and every time that situation has occurred, I am absolutely entering stop losses. And here's a good example. Right here, on this action right here, I enter a stop loss above here, and it works out beautifully where price, fails to get that golden cross. But in real time, I'm looking at this and saying that, man, if we break above 10,080, I need out of this, because this golden cross is highly probable to follow a break above 10,000, I guess 10,975 or so. So put a stop loss in there, and absolutely the same thing could have happened back in here where we wipe that out and then dump. But it's something that if you run it 100 times, and that's how I'm always thinking, is in terms of probability, not what happened right here, right now. But if we were to, flip the coin 100 times, this is going to be expected to happen, but a very small percentage, and that small percentage is very worth the times when it does blow right through. So that is definitely something that I will absolutely not be changing anything moving forward, and because of that I can feel comfortable about how things played out. Looking at it in hindsight and realizing that risk was managed properly, that I stuck to my guns to the best of my ability based on the limitations that I had, I'm fine with it. And there will definitely be times where I'll look back and say, man, I sure botched this, and that is a clear area where I could have done better. And those are the times that that's a lot more difficult to handle than these situations where you feel comfortable about everything that you did and you just know that sometimes it's not going to work out how you expected. So let's go ahead and just take a look at the risk and how it was managed, and what was lost on this position, and why it's just not that big of a deal. A lot of people will like to say that I got wrecked on this short position, and that's fine. If losing less than 1% of your bankroll is getting wrecked, then so be it. That's quite all right. So we started with bankroll of X, and into the short BTC position we entered 15% of our bankroll. 15% of X was entered short into BTC. I should have included the prices. I didn't, at around 10,330, and we exited at around 10,900 with a 10% profit take at 94.50. And the net result, the net ROI of this position is we lost 4.56% on the position. So we risked only 15% of X, and then we lost 4.56 of that 15%. So 0.15 times 0.0456 gives us minus 0.684%. So absolutely did have to capitalize on that loss. It's a bummer, and it was right within range, and this was what I wanted to clarify. In the past, I had mentioned that I expect losses in this system to be in a range of about 3 to 17%. There's been basically one outlier from that. So the very large majority of losses should fall somewhere in the range of 3 to 17%. And what I did a bad job of clarifying was that that's not my entire bankroll. I'm never risking my entire bankroll on one position. I'm generally risking about 15 to 40% is the most I would ever imagine risking on a single position. And in that case, if we have a loss of 10%, and we're risking at most 40% is on the huge end, then we're looking at like a 4% loss on the total bankroll, which is still definitely on the high end. The rule of thumb that most people will say is 2%, and absolutely stick to that. That's a great rule of thumb. Risk a maximum of 2% of your bankroll on any given position. That is absolutely a great rule of thumb. I'm comfortable risking up to about 5%. If I lose 5% on a position that I was very, very confident about, I'm okay with that. That means I can lose 20 of those in a row, and before going insolvent, and with a strike rate of 58%, and the reward versus the risk of the positions I take on, I feel comfortable risking 5%, but not all the time. Only on the most confident positions. On something like an Ethereum Bitcoin short, like I've been talking how confident I've been in that position, that may be a situation where I'm willing to position myself where I'm risking up to around 5% of my bankroll. But for something like this on Bitcoin short, it was a good signal, and I absolutely could have risked less than this. I was feeling pretty good that we're ready for a correction, and I'm getting a good signal with prices close to moving averages that are crossing over, yada, yada, yada. So 15%, looking back in hindsight, how did I control risk? Great. I love it. Way to go. Sure, I could have done less, but I think 15% was very, very reasonable based on the signal I was getting and what I was feeling about the overall market. And I have talked about how the only thing that matters is signals and not really what I feel or what I think. And that isn't entirely true. I should definitely elaborate on that, in that how I feel about the setup will determine my exposure size. So I'm not entering and exiting without getting a signal, but I am adjusting my position sizing based on the overall dynamics. Like if we're getting a signal to long Bitcoin right now, then I'm going to be juicing up that exposure because the overall market is bullish. There's a ton of room to go to the upside and absolutely time to risk big due to my feelings on the overall environment of the market. And those feelings are, very much an educated guess. It's very much not just pulling something out of thin air because I love Bitcoin that it's like I'm looking at other technical analysis to come to that. So the signals are, at the end of the day, all that matters in terms of if I don't get an entry signal, I'm not going to enter 1% or 40% or any percent. I have to wait for the entry signal. Likewise, have to wait for the exit signal. But I am going to be adjusting exposure size based on my confidence level of this position. So 15% exposure of my entire bankroll on this, absolutely love it. Definitely wouldn't have wanted more than less than 10%, and up to 20% probably would have been too aggressive. I mean, I'm really liking 15%. And often in hindsight, specifically after taking losses, you feel like you should have exposed less. And that is a very, very common thing for traders or anybody that's buying and selling, is that positions that go in your favor, you always think you should have bet more. In positions that go against you, you always think you should have bet less. So if you can, in hindsight, come back and look at the exposure and say that, man, that seems like pretty darn good amount. Much less would have been real weak. And I definitely, obviously don't want more, especially at this point. So being able to look back in hindsight at your exposure size is a very, very important way to review your trades. And I'm a huge proponent of reviewing trades. I'll continue to refer days back when I played poker professionally, because that is where a lot of my foundation has come from. And reviewing hands is absolutely what set poker players apart from others. When you were playing a session and you had a loser or a winner, and you come back and you're looking at your biggest hands to see how was my bet size on the turn, should I have bet bigger on the river, should I have folded this pre-flop, that is how you really improve. If you're just going through making trades and you're never coming back to analyze in hindsight those positions and really being self-aware, then you are costing yourself dearly. And that's something that I've often I've said, and I'll say again, is that I would prefer a losing trade that teaches me a good lesson than a winning trade. And that's a perspective that I think not many people share, but I believe it deeply, because I know that if I learn a lesson from a losing trade, that gives me a chance to plug a leak in my game, to plug a leak in my approach. And if I'm able to do that, if I'm able to improve my approach, then that's going to carry with me for the next 6 months, year, 5 years. And if I really am able to make an improvement that, say, just for example, takes my average rate of return from 15% to 16%, well, that's over the next 6 months, year, 2, 3 years, that's going to very, very much make up for one position that maybe cost me a little bit of money. So I would love, like, if I lose and I learn something that's going to stick with me for a while and I know that it's going to make me a better trader, that's way more important to me than making a little bit of money right now, because the money that will make me in the long run will be way more significant than anything I could make on one single trade right now. So that's something that if you're not reviewing trades all the time, potentially there's all these lessons out there, these pearls to be gleaned, to be learned, that are there for you to learn from. If those are all out there and you paid the money on the losing trade, but you didn't learn the lesson that was there for you to it was trying to teach you, that's the problem. So that is where I am a huge proponent of reviewing trades. And sometimes they're going to be like this, and that's what you want, where you go back and everything it looks good. There's not one thing that I can look back on and say that moving forward over the next 100 trades, I want to do this thing differently. And furthermore, you will want to look for patterns in terms of are your losing trades consistently losing more than you're expecting? Something, along those lines. Whereas if they're consistently falling within the ranges that you're wanting to see, then there maybe isn't anything to learn from that, but it's something that you can take confidence in moving forward, and knowing that in the heat of the moment you were able to stick to everything that you were wanting to stick to, in terms of executing the entry, not overexposing, and also properly estimating the risk. So that is basically covers the Bitcoin position. We will come back. Should we come back and do some Bitcoin analysis? And nope. I want to talk about the short on Ethereum, because there are definitely there is a big lesson that I have learned that I am actually kind of excited about. Anytime I, like I just said, if I lose money and there is a lesson out there to be learned, then that can potentially make me much more money in the long run. And that's something that when I start to see that, I start to get excited. So there is definitely a big lesson that I learned here. And I guess before diving into the analysis on Bitcoin, let's just go ahead and stick with that. So the lesson that I learned, I kind of talked about maybe yesterday, maybe 2 days ago, I don't remember, but the idea that when you are long a market, you want to long the strongest, and when you're short a market, you want to short the weakest. That's something I have believed in, but never considered on a deep enough level until now, is what I can say. And this has really hammered home that point for me. What has happened out of Ethereum and out of Bitcoin. Because at the same time I went short Bitcoin, I also went short Ethereum. And Bitcoin has been driving me crazy. Like, it's been very stressful position. Like, there's been multiple times where I've been really, throughout all of this, and even back into here, this has been really going against me, and that hasn't been any fun to hold on a position that's going against you. Then I've got to sit here and wait and see when I'm going to exit, and then when I do, it's at the exact wrong time. So this has been, a bit of a nightmare, like, for sure, since the first, like right in here, all the way through here. I mean, absolute nightmare. And what I was really wanting was from here to throw back to this prior horizontal that we saw on the last couple of weeks of August, which would have potentially turned 10,000 into resistance. Found we had a confluence of resistance from this trend line and from this horizontal. So right in here, I was really wanting this to find resistance here and turn back around. My entry's up here, and I had covered a little bit down here. If we found resistance at that level, I would have been highly confident in this breaking down 93 and then really making a significant leg down from there. And I would have been, the loss that I took was less than 0.5%. But if this broke down, I would have been up probably 5% of my bankroll is kind of what I was expecting. Right in here, we were up about 1%. So yeah, that was definitely in a position where it could have moved in my favor in a big way. And if it resisted right in here, I would have had a lot of confidence that that would have happened. And that's basically exactly what happened with Ethereum. Let's just go ahead and get these guys out of here. So what I said is I wanted to see it throw back and find resistance where it had held as support on the last 2 weeks of August. And Bitcoin, what did it do? It blew right through. What did Ethereum do? Comes up to retest. Can we draw that any more precise? We could draw it as a zone, which is definitely what I've been doing in real time. As we're coming up to test this right here, we see we got above just a little bit, came back down, came above quite a bit, closed basically right on that. That's why I was seeing if I could make it any more precise, was like, could that be below? But I think that was where that needed to be. So I would have been looking for a close below this, and then also close below this trend line. Let's just make this a little easier to see. So Ethereum did exactly what I was hoping Bitcoin would do, right? It came down, found some support, and then it bounced but went nowhere. And what did I say? If Bitcoin did that, I would have been highly confident that, you know, we'd be in for another leg down and my position would be in really good shape. And that is basically what we see here. Is I was entering, I guess it was down in here. I would have loved for it to be a little better, but it sure wasn't. It was definitely below 190, about 187. I can't remember exactly why. I think now I see it. Because something like that breakdown, because that is my entry, and I don't remember exactly how it was signaled, but I will go through that here in a second because it is a very important part of what I learned. So we will be going back to analyze Bitcoin. Right now I'm just wanting to cover what I learned about this position, and I had already been, and sometimes you have to learn things multiple times, and that's okay. And this is probably one of those things where absolutely this lesson was hammered home to me in the spring of when Bitcoin was blasting through 6,000 and taking off from 3 all the way through 6, all the way through 10, all the way up to 13. It's the strongest asset in the class, and therefore that's what you should be longing. And I absolutely was long Bitcoin, but I was also heavily longing alts, specifically Litecoin and Ethereum. In here and right in here, I was very, very bullish on the altcoins. We just gotten golden crosses on the daily. We were forming, some sort of bull flag, some sort of reaccumulation. If anything, I would call this a Wyckoff reaccumulation. And I was very, very bullish altcoins, and the money that I invested into alts made me a little bit, but not anywhere close to what Bitcoin returned. So that was like a lesson, like, man, definitely remember this in the future. When you're, if I would have just put all that long into Bitcoin, I would have made much, much more money, and the risk would have been basically the same. That's the whole point is, when Bitcoin was consolidating in some fashion like this, it was providing very similar entries where if, like, say you enter here, that would be a Wyckoff reaccumulation entry would be like here and here. Say you're taking those, it's the same sort of risk on Bitcoin as it would be for Ethereum in terms of where that falls apart is roughly the same percentage away for both, whereas the upside was way bigger in Bitcoin. We long the strongest in bull markets, and in the bear market, well, not necessarily bear market, just if you're wanting to go short, we want to go short the weakest. And this whole time that Bitcoin has been a nightmare, watching it move against me and stressing out about when I need to enter or exit or whatever the case may be, if I need to exit or set a stop loss, it's been, stressful and definitely not the ideal way for that position to play out. Whereas on the other hand, Ethereum has been playing out perfectly, absolutely perfectly. The whole time that Bitcoin has been giving me a headache, my Ethereum has been in profit, entering around the same time. And since Ethereum did find resistance here, it has never, basically it got back to break even maybe for an hour. But outside of that, this position has been in the profit the entire time. And it's found resistance exactly where I wanted it to, hasn't had any traps. Bitcoin has just had multiple nasty traps, like really tough ones. Both those ones that we just saw are really tough traps, which tells me there's big volatility on the horizon. But the lesson that I'm really, really learning here is that if I would have not shorted Bitcoin and I would have use that 15% or maybe 10% or whatever, if I wasn't short Bitcoin, I absolutely would have increased the exposure short alts, short Ethereum specifically, And instead of taking a loss on the Bitcoin, I would have a bigger position on Ethereum that is now, has been in profit the entire time. That's a big learning lesson to me, and absolutely one that out of the next 100 times, I absolutely do want to do something different. This is absolutely a potential leak in my game that I need to shore up moving forward. And if I do, just look at this one position, how big of a difference that would make. Instead of taking a stop loss for a 0.5% of my bankroll, I would have a bigger position that is in significant profit. I mean, this has already moved, a good deal. Let's see, what are we saying? Yeah, it was like 182, 183 or so. So this has already moved 7% in my favor, compared to Bitcoin having moved against me, like 5%, specifically where I had to exit. That's all the difference in the world. If you're taking a losing position and you're now putting that into a winning position, and you can do that consistently just with the rule of thumb of I'm longing the strong and shorting the weak, that is something that could make me add a whole lot to my bottom line over the next 6 months, year, 2 years, 5 years, 10 years, 50 years. That's why I get excited about sometimes, and just as a side note, it's often really hard to learn much when you win. If everything goes good and you just had a hugely profitable position and it's Lambos and moons and whatever, you're not. It can be hard to learn when everything goes good. When you lose, that's when it's absolutely time to make sure that if there's a lesson there that you are learning it. And if that is the situation, and you can learn something that stays with you for the next decade or more, then imagine how much of a difference that's going to make to your bottom line compared to just having lost out on, a 0.5% of my bankroll. So this is a situation where I'm actually pretty darn excited about what I am learning. And the more, sometimes you have to learn something once, twice, 3 times, and the more that you learn it, the more confident you become in that principle and in that idea. And I want to quickly show why I didn't do that here, and why I can say that I didn't necessarily make a mistake in real time, but I still may do something different moving forward. Very important. There's a difference between making a mistake based on here's the guidelines that I have lined out, here's what I'm going to do, here's what I'm going to trade, and then something happens and you go against it. That's a mistake. Whereas if you're sticking to your guns, sticking to your system, and then something happens where you realize that maybe there's a better way that you could have gone about it, that's basically the best thing, because now you don't have to give yourself a hard time, be overly critical towards yourself about really screwing up in the heat of the moment, and you can also potentially learn something that'll really, stick with you for a long time. So you guys know I like trading moving average crossovers. That's what signals my entry, and that's why I want to just cover this really quickly. So when we got this moving average crossover on Ethereum, it didn't happen until this candle. And we see today on Bitcoin why it's so important not to, be overly anxious about front running that, even when you're right here and it looks like it can cross at any moment. Also, that's when this price is most in danger of really, taking off. So right here, we didn't get that cross until this candle closed. And I'm looking at that like, it's just too far away. I mean, it's close. It's close, but it's just too far away. 14% away from where that crossed. I don't like it. So I absolutely passed up on that right in here. And then I also didn't take this. So this is where ideally I would have been able to enter on how I trade, is that if I miss this first golden cross because it's too far away, you sell the first retest of the 200 EMA. And I didn't do that for a reason that I'm very fine with. 2 reasons. One is I was really feeling much more confident in an ETH BTC short. I was really wanting to short, bet heavily on that position. And I felt like, having a big position short on ETH BTC and then adding to that with a significant position, or even a 10% of my bankroll position on ETH USD, that just kind of made me feel like I'm getting a little bit too overexposed to one direction of one asset, which is what I do not like to do. And that's where area you have to be very careful, is that if you're saying I'm only going to enter 30% of my roll into one position, so you enter 30% long Bitcoin and then you enter 30% long ETH against USD, that's a big problem, because now you basically got 60% of your bankroll entered into the same basic position. If Bitcoin doesn't go up, then we sure don't expect ETH to go up. So when you're entering certain portions of your bankroll into a position, you don't want to overexpose to the same sort of trade. And if I would have been betting heavy on an ETH BTC short in here, which I was, it would have been a mistake, in my opinion, to really take out significant exposure on ETH USD. Was also looking at a very bullish sort of reversal pattern that was kind of confirming right as we were testing that. Adam, Eve, and coming up to horizontal resistance. There were a number of reasons, and this is a good example of why sometimes you just have to stick to your system and disregard anything else. If it wasn't for the exposure I had on ETH BTC, I would not have. It would have been a mistake to not take this signal because of X, Y, or Z, and X, Y, or Z may have been seeing some sort of bullish reversal pattern. So hopefully I didn't lose people there and you get too confusing, but basically it would have been a mistake to not take this signal because I'm seeing an Adam and Eve pattern. It was not a mistake to pass on this signal because I preferred to bet heavily on an ETH BTC short. Now that changed. As ETH BTC started moving in my favor, I'm able to set stops at break even, and now I'm not risking anymore. I don't care how much exposure I have. I care how much I'm risking. If stop losses are set at or around break even, then it doesn't matter if the exposure, what it is, because what matters is how much I would lose if I get stopped out. So once the position starts moving in my favor and ETH BTC is no longer in danger of really losing me a lot of money, now I can absolutely look at shorting, ETH USD. And here is the lesson that I learned, that I'm going to think about a lot, definitely, is that, so we got this signal here to short Bitcoin. August 17th is the signal to short Bitcoin. And I absolutely did look at Ethereum. I wrote down August, but not the date. What was it? August 17th. So we come over here to August 17th. And so what we see is, as Bitcoin is getting a sell signal, Ethereum is really not anywhere close to getting a sell signal. Based on how I trade, I want to enter around this 200 EMA, or at least around this 50 EMA. If we're extended from these EMAs, then I expect a bounce back up into that area to, and if that doesn't happen, I still don't think that this is a good entry, just based on the risk reward. So I did, based on that feeling, enter just a very small short on ETH USD in here, due to we've got a sell signal from Bitcoin, and I want to short the weakest. So I'm looking at Ethereum, and I'm seeing that it's not in a good setup based on how I like to trade. So I enter a small amount, and that's where I am definitely going to be learning from this experience right in here, because while I'm seeing that Ethereum isn't in a great spot and that Bitcoin is flashing a sell signal, I just went ahead and took the Bitcoin sell signal, opposed to having the idea that, maybe I should either pass on the Bitcoin sell signal entirely or just do a very small amount, like 5%, with the idea that if we do get a bounce to the 50 or 200, I'm going to be using the Bitcoin sell signal on Ethereum. Now that's about as advanced as I'll probably ever get in terms of, I'm just hoping I didn't confuse people, and I'm always trying to keep it as simple as possible. But this is an area where absolutely I don't think I made a mistake by not, entering the whole position here because I didn't like seeing this overextended, but it's still an area where I can potentially learn from, in that if I would have seen this as a area where maybe it doesn't bounce and it's okay, I just leave it, but if it does, I hold off or I scale down on the Bitcoin position so that I'm ready to, as we've seen, this thing just continues to throw back and act exactly how you want it to based on technical analysis. If now, knowing what I know now, moving forward, I am strongly inclined to believe that I will change how I act on signals. And that is a lesson that could stick with me for a lifetime and could make an enormous difference on my bottom line moving forward. So can't draw exact concrete conclusions just yet about specifically how I'll handle this situation moving forward, but it has given me something to think about a lot, and have already definitely used that to my advantage. So let's get back into the Bitcoin charts. This really shouldn't take long. There isn't a whole lot for me to talk about because it's pretty all I'm waiting for is this moving average to cross over, and since it didn't happen, I don't think it's going to happen. I realize that a lot of people are assuming this is a given. I would take a bet that it doesn't happen. I wouldn't, like a friendly bet. And this is why I love this system so much, is because when these get very close to crossing, they are very in danger of getting a sharp reaction back to the downside. And that's exactly what I've been hoping for on this show is, as we get closer, give me this sharp reaction. If you get a sharp reaction before those cross over, then in my mind, when I see this right here, where it's like we're within a whisker of crossing, and instead we dump hard, like hard, in just a short amount of time, from 10.8 to 10.2, of course, Bitcoin can do a lot more than that, but the point is that it didn't have much time left. It had like one candle or two candles to make a sharp reaction. Otherwise, we're getting the cross. And since that did happen at the last moment that it could, I am not expecting these to get a golden cross. And if that doesn't get a golden cross, look out below. I will say that time and time and time again, where when it gets close but doesn't happen, that's when you expect us to have a significant reaction, significant follow through. So what I'm seeing right here is definitely over a 50% chance that these don't cross. And that is a bold statement looking at these, but for me and how often I've seen this exact kind of thing happen, ideally without this part, ideally with more of like a straight, and then, but how often I see these get close and then this action right here. This is why I use EMAs. Simple moving averages can't do what these do right here. Exponential moving averages react much quicker than simple moving averages. And what will happen is right here they were very close to crossing, but now look, the EMA is already turned down. It's definitely flat, and maybe it's turned down. It's flattened. It's not turned down yet. So the 50 EMA is no longer angled up. The 50 EMA is now flat. I wonder about the 200. $200 is flattened out as well. So that is absolutely the power of the exponential moving averages, in my opinion, is they refuse to cross over. They just refuse to cross over. And when they do, it's a big deal. When they do cross over, that is absolutely a big deal, especially for me. But when they refuse to cross over, that is a very, very important sign. And like I said, simple moving averages, they just can't react this quickly. They would have already crossed on this action, probably back in here. But these guys, they just wait. The exponential moving averages just wait and wait and wait and wait and wait. And then when something like this happens, they instantly flatten out, because now they're taking into account not just the last 50 periods, but they're more heavily weighting the recent action. And the recent action is flat. So now these have flattened over, and for them to cross, we gotta, bounce back up into this area. This is a very significant candle. What do we engulf? You only need to engulf the body. So that's engulfing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. This candle engulfed the last 22 candles. That's not a mistake. Like, that's not a, that is important. And we definitely want to check what volume is starting to look like. Not as much as I would have thought. I definitely would have expected that volume to be more significant. So that is definitely a good sign for the bulls that there isn't an enormous amount of selling there. That's significant, but it's not as much as I would expect to see. So definitely was watching for this low to get taken out. It did get taken out. Now it's popped back up. This is absolutely a spot where the risk reward on the short is awesome. I mean, I really wish I was still in my position. Obviously, I would be feeling like this thing is going to go in my favor and I'm going to, just look really good and yada, yada, yada. I definitely wish I still had that position because I do think that it would turn into a profitable one. And being that I'm out of it and manage risk properly and now am still getting a sell signal anytime I can enter near these moving averages, it tells me that the risk reward is very, very good. Because say that I sell here and then we do get the moving average cross, I'm getting out like a percent or two away. Is what I would strongly expect. And that's why I'm so obsessed about entering around these, is because if you can enter on them or even above, then if you get stopped out, it should be very close to the price that you entered. So definitely seeing a lot of reason to go ahead and re-enter the short position here, but absolutely not going to do it due to what I've learned so far, and just looking at, give me one good reason not to put it into an ETH short opposed to a Bitcoin short, and I don't have a good reason for that. So I am absolutely interested in putting that money back to work on the short side of the market, but not into Bitcoin. But that being said, this is definitely a position where the risk reward is very, very nice, and in a good situation to show that that learning, just potentially learning and using that to do something differently moving forward could potentially, just make so much more money than you cost yourself on that one trade that you ended up losing on. So really, there is not much that I care about at all other than closing a 4-hour below 10.223. If we do that, then that goal, I would be super confident that golden cross isn't coming. Right now I'm like 60%. If we can close below 2,228, I'd be like 70-75%, which is as confident as I could really be, because if these were going to cross, it really should have done it in here, in my opinion. And now that it looks like they are flattening out and the price is fighting to close below them, first looking for a close below the 250 EMA, and then looking for a close below this low, which is at 10,225 on BitMEX. That would turn the 50 back down, and when the 50s turn back down, it will be expected to turn into resistance and would tell me to kiss the golden cross goodbye. So keep a close eye, and then I would be watching for a 50% retracement of this candle. This is an extended range candle, or also known as a Marubozu. And if you can retrace 50% of a Marubozu, then you should expect it to continue to the upside, but that's very hard to do. It's going to be very hard to retrace 50% of this candle. If it does, that's a very important sign, and I would say that that golden cross it would be there, and it would look like there's more upside around the corner. But if we do bounce anywhere in here, I would expect it to really struggle to retrace 50% of this candle that engulfs however many candles it did. So as long as we are below that 50%, and ideally the 0.382 or 0.618, depending on which way that gets drawn. I'm always looking at that. Those is kind of like the same sort of areas, which I know it leaves some room for me to refine that. So basically, I would really want to see this resisting below here. And if it does start to rally, that's the area where if we can get back above about 10,600, then we should be in good shape to continue to the upside. I'm giving that, I'd said 40, but that just doesn't even seem like there's a 40% chance of retracing that right now. Call it 35% in my mind, 65% that we continue down and refuse this golden cross, which would be quite bearish. So let's just see if we can take a look at some candle patterns. Definitely these daily candles have been quite important to me, and another just prime example of why I'm very happy about putting my stop loss here, even though I did get wiped out basically at the exact top. This formation, like you hear me talk about time and time again, is the setup for a Bill Williams fractal, and it is so rare to get to this fifth candle of a Bill Williams fractal and then have it break above that top. Like, I just, once we have this 3 candles here, I almost always expect for a fractal to follow, having this 3 candle pattern here. And as a matter of fact, that's what Tyler Jenks used for his Selgin trading system, not even being aware of Bill Williams fractals. He didn't even know about those till I brought him up after he was showing that this is what his sell signal is on Selgin, is high between a lower high and a lower high. So for me, waiting for this next candle is almost unnecessary because of how freaking rare it is for it to be able to retrace back above this high. So when I was looking at this daily close yesterday and, wondering if I need to set a stop loss, there is no way that I should have not had a stop loss here. And that is just another absolutely beautiful trap. I mean, even though it absolutely got me and wiped me out of my position, I mean, that is somebody made a whole lot of money there and entered an enormous short right at the top. And I mean, that is action that is so unnatural that I just have to tip my cap to whoever was able to pull that off. And if it was just natural market forces, then tipping my cap to the natural market forces. I have a great amount of respect for both of those. So this is absolutely something that is quite bearish. Yesterday, this was giving me a good amount of confidence in my position, and it would have been awesome if this stayed below this peak, but somehow, some way, it was able to drive it right above for a very short amount of time, which was absolutely a trigger for many people to exit shorts, and maybe a trigger for some people to enter longs, but definitely an area where somebody gained a lot of liquidity there. So what I'm looking at is a very bearish pattern here. With this, even though this did get above, the fact that we just wicked and now we're immediately back below and the price is now below the 50-day moving average, this really points to more downward direction and therefore gives me, that much more confidence that we won't get a golden cross on the 4-hour chart. So definitely a very bearish candle here amongst a couple bearish candles and a bearish setup beforehand. Okay, I wonder where that SAR is. Still ways away. Want to take a look at the weekly candle. Not that bearish, pretty darn neutral, maybe even a bullish argument to be made with this pivot, low, higher low, higher low. If anything, this is a bullish setup. Definitely not a bullish wick, and these aren't bullish candles in and of themselves, but taken together, if anything, I would say that's bullish, and definitely look for the 2-week low to get taken out after. Did we test the 2-week high? Oh, that would be fascinating. Wow. That is amazing. Okay, so the high on this, 10,959.5. Yeah, that's incredible. So it not only took out that bearish setup on the daily chart with the that fractal that was developing. Not only did we wick above that, we also wicked above the 2-week high, which is absolutely a buy signal for a lot of people, and barely got above it, just like on the daily. Absolutely amazing. High on this is 10,959, and this is 10,968. So $9 above the 2-week high after we took out the 2-week low on this candle. So taking out that 2-week low would provide a potential entry upon retesting the 1-week high, and the stop loss would be set at the 2-week high. So there's a lot of people that got stopped out up there. I'm certain of it. That is a nasty trap, and hood's off, right? Okay. One thing I wanted to show was the monthly candle. Those are some bearish candles on the monthly chart. Shooting star, doji type of thing. Bearish wick here for sure, where we had a lower high, and then absolutely a shooting star on the monthly, and now we're re-exploring that wick. When you get these shooting stars and you get back inside of that range, that's generally a really good selling opportunity, not necessarily based on strike rate, but more so based on risk reward. And strike rate is pretty sweet too. So, right here we come back inside this wick to re-explore it. Provided a pretty darn interesting selling opportunity. And then we come in to re-explore this wick right here. Provides a pretty darn interesting selling opportunity. And now we are re-exploring this wick. Very bearish on the monthly. And absolutely, it's agreeing with my read on the 4-hour and the daily that this looks like a pretty darn sweet spot to sell. And often the best spots to sell are where the best traps occur. Because when there's when it becomes pretty obvious spots to sell and pretty obvious spots to set your stop loss, that's where somebody starts taking some notes and seeing if there's a play that can be made. And so definitely keeping our eye on that this looks like a great selling opportunity, and seeing those nasty traps that just occurred suggests to me that a lot of people are seeing it that way. I did have somebody mention that we've never had 2 back-to-back red monthly candles and stayed in a bull market. I did look into that, and I think I have to disagree. So one second. Yeah. So right here we had back-to-back red candles, but much different. Notice how this one has the wick below, and we never even got down to re-enter that wick. Much more bullish than retesting that wick. It's just like definitive, support. So these 2 red candles back to back, much different than these 2 red candles. We've never had anything like this. I've never seen, maybe before this chart, I've never seen anything like this in Bitcoin with these 2 nasty, nasty monthly reversal candles. In general, we've had more something like, sharper, harder reactions. So that's definitely something that I'm keeping my eye on. Something else that kind of jumped out at me is this. Very interesting as far as I'm concerned. Is this, don't know why that's up there. I'm sure there was a reason, but don't know now. So I'm always looking for parallel channels, and when I saw this line up, like so, I asked myself, could we draw a parallel line on the bottom? So I kind of started with, and I guess I messed up just a little, or maybe I just tweaked it. So I start with a parallel line above that, and then I come down here, and it's like, okay, that could be something. I mean, I don't want it to be. I'll tell you that much. That would not at all be something that I want to, like, you know, and that's not something that makes me at all feel good. But it is something I definitely want to be aware of, and am always paying very close attention to these potential parallel channels. And maybe, I was even looking at something like that. There's a couple ways that this could be drawn, and it is absolutely something to keep in the back of your mind. I mean, I don't want to throw out any numbers, but if we were to retest the bottom of that channel, I mean, yikes. Not calling for anything, just trying to mentally prepare for what could possibly happen. So I said that, seeing Bitcoin as potentially a good spot to just go ahead and re-enter that position, but not being interested in it because I have already started to increase my exposure into the ETH USD short, which is basically due to the lesson that I've learned, and it is already paying off. I mean, learning is awesome, and especially when it starts paying off. So definitely have been building on my ETH USD short for multiple reasons due to what I've learned, and also because the ETH BTC has moved enough in my favor that I'm now not really risking much. I am only risking unrealized profit at this point, and have been trimming. So this one has been playing out pretty darn beautifully for me. Basically, what I did was entered on this crossover right here. When we test the 50 EMA and get a crossover with the 9, I am not expecting a 200 EMA retest, and therefore I can enter on the 50 or the 200, and I do enter smaller on the 50. But if we break through the 50 and then get a bearish cross with the 9, then that tells me that we're not likely to revisit the 200. So I went ahead and started scaling, adding to the position on that candle right at 175. We broke down the SAR. We closed below horizontal support, and we got the bearish crossover with the EMAs. So I basically added to my position there, and then I entered an order to trim at, what was it, 166. So let's see here. I pretty much nailed that guy right there. 166 even was where I set an order to trim based on this horizontal support right here. So basically, I've already been able to increase my exposure on ETH and trim and have the price come back to me. That is ideal. So now I have the option to re-enter what I trimmed, and I am pretty darn inclined to do so based on what we're seeing here. So we see that this broke down. I mean, everything has been playing out just how I would want it to, right? We throw back to retest horizontal and trend, perfectly resist it, form. It's probably like a head and shoulders on a lower time frame. Maybe, you've got this low, high, and then kind of a little consolidation. And then we break down that 50, and then we come back to test horizontal, allowing me to protect the entry that I just made. And now it looks like to me that we are just doing another throwback to horizontal. What we're looking at now is a pretty bullish wick for sure, but I mean, I would need to close above this red line to have any sort of confidence in that, not just being a minor little dead cat bounce. So would be drawing some horizontals and thinking that right in here is definitely a good spot. Basically what I'm deciding now is, do I only re-enter what was trimmed here, or do I also maybe add a little bit instead of doing anything with Bitcoin, just sticking with this guy, and that is definitely what I'm looking at right now. This does seem like a pretty darn attractive spot to re-enter. It's not testing the 50 or the 200. So basically my conclusion is going to be I'm not going to add in any more than what I trimmed down here unless we're able to get back up to those EMAs. But absolutely love being able to sell high, buy low, and then sell high all in like a I think 36 hours or so. So let us take a look at the chat. We've been going on for I guess not longer than I necessarily wanted, so have a water. Lots of whales were liquidated on Mix. I watched it. I believe it. I saw one myself that was like $9 million. I don't remember the last time I saw a liquidation on BitMEX for $9 million bucks. So that's cool. Can get to EQ. Not sure what that means. Current monthly bar is green. Yeah, but it's inside the wick of the prior very. Okay, I'll pull that up. So Mario Casanova, always appreciate your thoughtful input, and he thinks that the monthly looks bullish as fuck. And I mean, I can, there's absolutely an argument to be made. I mean, absolutely, like this is up a huge amount and is consolidating, and could absolutely make the argument that it looks like a giant bull flag. Absolutely. So that is something that would be the alternative perspective, and definitely always want to be open to all perspectives. And if this guy, and if we can break through the top of this trend line, I mean, I've told many people that I would be expecting a retest of prior all-time highs in short order. So if we can confirm that, that is potentially an interpretation that I would be forced to agree with, and it would be super interesting to see that that's exactly kind of what I'd be expecting, is a sharp, big move that breaks through all-time highs and then has another, and that's where everybody's going to be, FOMOing in huge buyers, and then it has that next correction down where we get, something like this. This is only if we're able to break above that top boundary. So definitely appreciate the input, Mario. That is definitely a very I sure hope that this happens. I mean, this would just be the best thing ever. If we can break through this trend line, break through that weekly SAR, then absolutely this is what I would be calling for. Not necessarily because of this pattern, but I probably would use it to support my case. Something along those lines, which just make a whole heck of a lot of sense. And it would also kind of maybe give us some sort of bull channel if we could maybe do it like that. So definitely will be keeping my mind on that. Reason why I am inclined to disagree, even though this monthly is green, it's very early in the month, and we just noticed that it's been lower high, lower high, lower high, and anytime we've gotten back into the wick of the previous candle, it has failed to close back in there and has therefore provided a great selling opportunity. So I'm confident that this month is going to break down this low and close below 9,500. That's a call. I'm confident that we are going to do that. And I will take that right off the table if we get a golden cross with the 4 hours. But until that happens, this is I'm most inclined to give this the descending triangle read, opposed to a bull flag on the monthly. I am most inclined to, at this point, call this a descending triangle. Can be drawn on the daily, the 3-day kind of can get it in there on the weekly. So really, when you're in a pattern like this, the only thing that matters is which way we break. If we break up, I don't care that this looked like a descending triangle to me. If we can break this trend line, that's all that matters. I don't care about basically anything else. And I would probably say that bull flag on the monthly is the best interpretation, probably by a long shot. If we break this to the downside, then absolutely I'd be very confident that this is a descending triangle. So at this moment, we really just kind of need to wait to see which way it breaks, in my opinion. Okay, so that I think can't go through everything there, so definitely do want to take a quick look at ETH BTC, see how that's coming along. As we've seen ETH USD look weaker every step of the way, that tells us that ETH BTC should be losing value, and man, does that look pretty. Are you you guys are probably familiar with the term death spiral? Death spiral. If you're not, look into that, because this is basically one of the best examples I've seen in a while. XRP is the next best, but this is a death spiral. Whether or not it's going to stop tomorrow, or take it to zero, who knows? But bottom line is, this is like the single most bearish setup that you can have, is where it's just like a straight move down and you barely even get counter trend bounces. What do we have back in here? A beautiful death spiral, where anytime you got a green candle, it was just like a great selling opportunity. And it was just a tight range where it just couldn't go anywhere. Okay, so definitely loving what I'm seeing out of this. It continues to more than make up for any losses that I had to account for in my Bitcoin position. So the last entry that I took and suggested was this breakdown here. So absolutely, took that myself, and I'm loving that every time I have found an entry, it has basically immediately moved in my favor, which is why I am wanting to continue. When markets are really moving in your favor, it's a good time to bet big. When markets are really just moving against you, it's not time to just add. We want markets that are moving, consistently in our favor. And when that happens, it's time to be aggressive, because they're, it's hard to find that sort of situation. So really started going hard on that breakdown, added on that breakdown, added on that breakdown. So just continuing to add every time that we consolidate and break down within this channel is absolutely the game plan. I'm wondering if we have done anything with the 4-hour SAR. I know that's been prolonged finally. Okay, great. This is where basically you get the long string, long string of SARs. Let's see what happened last time. It's like you get a string, just one. You could, just basically, if you have a string and then you break down that next one, that's a really good signal. So here right there would be the signal. Right here would be the signal. And then that's kind of what I'd be watching for here is, let's see, maybe this thing can get a nice counter trend bounce. Maybe this is the bottom. I mean, who knows? But basically, this is what I was watching for, was let's wait for these to get broken and then see what happens on that next breakdown. If we then quickly reverse them back to a bearish posture, which look how close. I mean, isn't that amazing? That how often do you see when the SARs reverse and then they start this close to the candle? That is amazing. And that just shows you that there's been no juice in the bounces. It hasn't gone anywhere. The extreme point is right here. So we're breaking the SAR very close to the extreme point, which means that these are very much in danger of getting reversed right away. And it almost already happened. So definitely we'll be keeping my eye on that. I think the single best trade has been for a while, shorting alts versus BTC, and we're getting to an area where there definitely could be a major, move that the trades has been pretty, there's a lot of people on the short side, and somebody may be wanting to do something about that, or maybe the market forces naturally are going to, send a sharp move to the upside. So definitely be very, very, very careful about entering on such a big down move. And that's where we want to do our best to distinguish between an exhausted trend compared to a strong trend. So let's just pull up the ADX, because if this thing is, in strong trend territory, then that tells us that it could, that next SAR breakdown could be a good option. If it's not, then it tells us we need to potentially wait, for a major correction. And this is in strong trend territory. So until this ADX gets up above, I'm going to say 60, then all signals are a go for this thing to continue moving down. Strong trends occur between, I would say, 25 to 50. And then I always look for prior action, and we see that we've had higher highs. So as long as this thing is under 50, this is absolutely a strong trend opposed to an exhausted trend. And we want to bet hard on strong trends that are moving in our favor, and we want to get out before they become fully exhausted or, very close to that point. So as long as we're below 55, 60, I'm feeling like this trend should hold. This death spiral channel should hold. Once this gets up around in here, that's where I'm going to be watching very close for this trend line to break, which definitely could provide some signals to go ahead and get out. When I'm deep in profit, I will not necessarily, I don't always wait for those moving averages to cross. If I'm big in profit, I can absolutely take profit, along the way without moving average crossovers to manage risk and to also ensure that I'm not leaving too much on the table. Much different than when I'm entering. When I'm entering or exiting at a stop loss, I need to be very, very much waiting for signals compared to if the market is really moving in my favor in a huge way. Sometimes I just want to take that money off the table, and in that situation, I'll always partial profit take, and then always hold on to a piece of a position that is moving in my favor, because I think this thing has a long way to go. Okay, one last glance at the chat. What you got up there about the Livermore cylinder? Yeah, we looked at this yesterday. Definitely could be seeing this in Bitcoin, and that's why I'd be very interested in that top trend line breaking down, is that potentially we're at point number 5 or point number 7 of the Livermore accumulation cylinder. It's on the last hair of its chinny chin chin. Let's pull that back up. Like, we're just at such a crucial point right now in the markets where if we look at the daily and we connect the breakout with the first correction, and then we just kind of try a best fit line on top that basically got blown out just for a little bit, but that will kind of happen. We can draw that guy in. So you kind of have the flat. I don't know if his has the phase 1. It doesn't. That flat area of accumulation, and then kind of what I would like call a reaccumulation cylinder, because this is definitely accumulation, that flat area, down in here. And then what we could be looking at here, absolutely, this is the most bullish perspective in my mind, is comparing the Bitcoin price action to the Just See Livermore accumulation cylinder. And as long as this trend line holds, that is possible. If this trend line does break down, if we break down 96, which the monthly really makes me think we're going to, and so does this failure to cross the 4-hour golden cross. If we break that down, that's gone. But if instead we break this to the upside, then you're probably going to hear me talking about this a whole lot more. If we break this to the upside, I'm going to be expecting a return to an all-time high, and maybe making an all-time high for a little bit before another big leg down that would just be back up into the 16,000 area or 615, whatever. If we can break through the top of this, absolutely, I'm thinking a return to the prior all-time highs is very likely. If we break down this trend line and we break down 9,300 support, I'm going to be looking for a big move to the downside. So appreciate your interest in that. Hey, bro, I think this is all manipulation. That's something that, you guys have to all come to a conclusion yourself. what you want to decide, because I drove myself crazy trying to figure out is this market just completely manipulated 100% of the time, or is this completely natural 100% of the time? And I've fallen kind of in between. Like, I absolutely believe that markets are manipulated, and on a very regular basis. Like, anytime that a market can be manipulated is going to be manipulated. And I think that markets are probably manipulated more than they aren't. But I just quit caring, because I just want to be on the right side of the manipulation. I mean, if markets are going up and I'm long, I don't care if it's because of manipulation or something natural. And I can drive myself crazy by trying to decide if this is natural or not. So I just kind of decide that it can be either. It doesn't matter. And that is why I love technical analysis. If you are manipulating markets, you're manipulating the charts. And if you're manipulating the charts, I'm going to be able to see that in technical analysis. If there is manipulation happening, the only way to protect yourself is through technical analysis. There is no amount of fundamental research that you can do that will protect you against inside traders or market manipulators, because the fundamentals will not matter. They could be the most bullish fundamentals ever, but if the market manipulators are driving the price down, then that's all that matters. So the only way that you can protect yourself against manipulators and inside traders, in my opinion, is technical analysis, because there's no amount of the technical analysis is what picks up on things. If there's somebody inside trading and inside selling, well, I'm going to see it on my indicators, and I'm going to then get sell signals. If this is really, a huge manipulation that is really going to make a big effect in the market, then it's going to make an effect in my indicators, and it's going to cause moving averages to cross over. And absolutely, when I just got stopped out at the top yesterday, absolutely, I think that was manipulation. Absolutely. But I'm not going to blame it. I'm not going to say that, oh, woe is me, these manipulators, it's impossible to win because there's always somebody manipulating the markets. I know for a fact that this is going to happen. And when this happens, I absolutely do believe that it's manipulation, but I just don't care, because I know that manipulations happen. And not only when I'm trading, I have to beat the fees, I have to beat the market. I also have to not necessarily beat the manipulators, but not allow them to beat me. And that is where I'm such a big proponent of crossovers of the moving averages to signal entries and exits, because it's so often that will allow me to avoid those manipulations that occur. And absolutely, I mean, if this happened 12 hours later, I'm pretty certain I would have been able to avoid it if I was at my computer and there and watching. So without rambling too much, you kind of have to decide that if you decide that all markets are manipulated at all times and there's nothing you can do about it and they're always going to beat you, then what are you even doing around? Just maybe buy and hold and never look at a chart again, because you're just going to basically drive yourself crazy. But if you can take the perspective, sometimes markets are manipulated and sometimes that works in my favor. Sometimes I'm long and markets get manipulated up, and sometimes it doesn't work in my favor, like right in here. But what's most important is to not point a finger and blame outside sources. What's most important is to look inside and say, was there anything that I could have done differently here? Is there anything that I need to learn here? Is there any better way any better tool that I can use to protect myself from these market manipulators? That's what's important, is that you're not placing blame on outside factors that you can't control. Because if you're just convinced that every market is manipulated at all times and that there's nothing that you can do about it, not even through technical analysis, then you're wasting your time, even looking at charts, as far as I'm concerned. So we did just get the daily close, as a matter of fact. So that is something we'll briefly take a look at. And it's, again, a long show, so thank everybody for sticking with me. So this is a good opportunity to just kind of look at, did this close below the 50 EMA or did it not? Very, very close. So what we can do is we just hover over the candle and then we look up here, right up in here, and it says close 10,308.92. And then we can look over here at the EMA and it will tell us the exact price. So we've got 10,308.75 versus 10,308.92. We did not close below the 50 EMA. So that's good to notice. What about the daily 50-day EMA? That looks like we did close below. Close is 10,308.92. EMA 10,329. Much more important than the 4 hour. So absolutely a bearish close, closing below the 50-day exponential moving average, which is really, this still has all of the makings. It still smells like a fractal. It still looks like a fractal. If you just take this wick out, which I don't believe is real, and that's another area where I will kind of make adjustments. Since I do believe this is manipulation, I'm not going to come onto the podcast and be like, oh, I got manipulated out of my position and blah, blah. But what I am going to kind of do is say, you know what? I have a high degree of confidence that this was manipulation, and it was, you know, a good trap. Whoever did this, hats off to you. You crushed it. That was, you know, beautiful. So therefore, I am going to kind of discount that and still say that this counts as a Bill Williams fractal. To me, effectively, this still counts as a Bill Williams fractal because of the closes are all lower closes, and this is a significantly lower close. And also notice how this close not only went below the 50 EMA, also confirmed these reversal candles. We've got two reversal dojis that were both confirmed on this candle right here. So absolutely, I am not expecting us to get a bullish crossover with the 50 and 200 EMAs on the 4-hour. I sure wish I was still short. I would be feeling freaking awesome about it right now, but I'm not, and I have learned, and I am already implementing what I've learned, and I'm already making a little bit of money from that lesson that I've learned. So absolutely very happy about what things are happening. So Mark Perea, I love manipulation movement. It's something to separate the kids from professionals, shake out the weak hands. That's really what I think. Absolutely, definitely, that's what it's. You know, big traders, big whales that they need to gain liquidity. Like often when they're manipulating a market, it's not so that it goes in a direction, it's so that they can get orders filled. Like if you got a $10 million order that you want to get filled on BitMEX, you're almost going to need some kind of manipulative tactic to get that order filled, whether it be you know, putting in these orders on the opposite side that really make it look like there's a lot of, you know, demand on the other side of the trade, and then taking that away. Like there's a lot of tactics that these big traders use to get filled, and it's not really so that they can push the market in a certain direction. It's more so that somebody is really wanting to short, and they're having trouble getting filled on their shorts, and they know that if this thing takes off for like 12 hours to the upside, there's just going to be an enormous amount of buyers, and they're going to be able to fill as much of their position as they really can ask for. And that's where I definitely think manipulation happens the most, and it's something I can't even be mad about. That's just like somebody's out trading me. That's what I think of it. I don't think of it as manipulation. I think of it as good trading for the most part. Is if somebody was able to, you know, get themselves a ton of liquidity by buying here and getting price to kind of break through this area, and then immediately turning around and selling all the way up and selling what he bought plus, you know, times 10 basically, and then getting an order filled that he wouldn't have been able to get filled otherwise because there were so many people market buying all the way up, and absolutely shaking out weak hands. And that's what the Wyckoff pattern is. Like that's what Wyckoff talks about, is that you will have traders like the spring in a Wyckoff pattern. That is what some people would say is manipulation, and what some people would say is just good traders driving down the price, shaking out weak hands, gaining liquidity for themselves before it shoots in the opposite direction. So absolutely, that is how I view, you know, manipulation, and I mostly view it as just good trading and people with a lot of money that are trying to get a lot of exposure. All right, so definitely some good questions and good input. I'm glad that I was able to get to some of that. I will definitely be keeping my eye on that monthly chart. If that does break the you know, downward trend line to the upside, then that really does look like an enormous bullish flag, but there's a long way to go before breaking that trend line to the upside. And what we're seeing out of the daily chart and what we're seeing out of the 4-hour chart leads me to believe that that's not going to happen. So thank you everybody for tuning in. I will go ahead and sign off. It is time for my hot springs meditation session. It's Friday night. I will be looking forward to tomorrow. I was thinking about going camping and fishing, but there's a big UFC fight. Khabib Nurmagomedov is going to be taking on Dustin the Diamond Poirier, and that is a fight that I really want to see. So I may pass up on the camping and enjoy some time watching UFC, and then I will be taking tomorrow off. Either way, I do need a day off every week, and Saturday is the best day for that. So almost certainly I'll be unavailable tomorrow, and we'll be looking forward to catching up with everybody on Sunday. We'll plan on shooting for going live around 7 Eastern Standard Time. That would give us about an hour to do analysis leading into the close, and then as the candle closes, we'll be able to cap it off with that. So thank you everybody for tuning in. We'll plan on catching up with you later.